Okay, welcome back to this channel. So this will be the part 2 of the break and retest video I made sometime last week. So in this video I'm going to do the bearish example. The other video, please, if you didn't watch that one, you can go back and watch it so that you understand where we started from. So I'm just going to enlarge my screen and let's go. So let me do the bearish version. Of course, before you understand break and retest, you need to understand market structure. So in this case, we are doing the bearish version, which is giving us a vibe of lower lows, lower highs, and lower lows. All right. So in a market like this now, it's not perfectly drawn, I understand, but you get the point. Anyway, the market doesn't present a perfect picture anyway, so what is there? All right, so in this case now we have a market trending downward like this, creating what? Lower lows and lower highs. In this bearish market, lower low, lower high, lower low, lower high, lower low, lower high, lower low. You understand? So this will continue like this until it hit a key level where the market will eventually reverse to the upside, which is popularly called reversal, as you know. So in this case, what are we going to be looking for? Number one, we are going to be looking for minor support and resistance area so that we mark them out, and that will be our area of interest. Some people call it point of interest. So that's what we're going to be doing. All right. So now, since we've established that this market is in a downtrend and we know this is a lower low, this is a lower high, this is a lower low, this is a lower high, this is a lower low. So, and I also bring your attention to what is called impulsive correction, impulsive correction, impulsive correction, impulsive. So this is an impulsive move, a retracement, impulsive move, a retracement, impulsive move, retracement, impulsive move. So in this kind of market, what you want to be doing is buying all the lower highs. What I mean is be buying from here. Sorry, selling all the lower highs. That's what I mean. Selling. I mean, you sell from here, sell from here, sell from here. Sometimes catching this first leg is always very difficult because at that time you don't know where the market will push. Maybe it's coming from the upper side. Maybe it's coming from somewhere like this. Maybe from a very strong bullish trend, and it makes its way up here like this. So most of the time, selling from here will not really be that easy because you don't know if the market will just pull a little bit downward and continue going up. So most of the time, it's really not easy like that. But today we are looking at the bearish side of this. Okay, so you want to be selling all the lower highs, all the lower highs. You know why? Because we want to be catching the main impulsive move of the market. You can still buy this rally, you can still buy from here if you want to counter trend, if your system is sophisticated enough to do that. All right, so you want to be doing counter trend on this kind of market is totally fine, but most of the time you end up not catching the main big move of the market. You might just be carried away by the short-term buying of here, and you just catch these small peeps, with a lot of struggles and up and down, and you might not really get the impulsive move. So most of the time, we advise that you just go with the trend where the most money is being made. This is where you back most of the pips. So now, having established that this market is in a downtrend, creating lower lows and lower highs, what we want to do next is mark our area of interest, which would be our, in this case, more of the resistance. Okay, what did I do? Did I just I went and deleted it. Okay, just to draw it back, that won't be a problem. I'll bring it back. Okay, so all right, so since we have this clear market, bearish market, so what we want to do is define the areas where we'll be taking trade for. So in this case, in a bearish market, once the support is being broken, it tends to become a new resistance. While in a bullish market, once the resistance is broken, it tends to become a new support. Okay, so in this case, we'll be marking out our areas of interest in this case, which is this support here, because it's in the bearish. This is a bearish market, right? So what we want to be doing is to be selling from the retested area, in this case, which will be these areas that we're marking out. Okay, so in marking your zone, the zone don't have to be too big, if not you get confused. So you just mark out and leave it like this. Okay, so in this case, this is what we have here. So like I said, let's assume there's a market structure coming from the bullish side. You can mark this out so that you see the impulse break and the retest. Right, so we want to be selling all our positions from the lower highs, these marked out areas. Okay, now I promised to talk about entries, so I will be so fast so I can talk about entries also on this video. So since we'll be selling from these areas, okay, now what we want to wait for is, after this impulsive move, a break of structure, we want to wait for a pullback back into the previous broken area. That is break and retest, guys. That is all it means. Okay, there's nothing more to it. There's no need making things complex. Okay, so now that we established that we want to wait for a pullback, a retracement rather, into our area of interest. So in this case, we want to wait for a pullback back into this region. So for example, you see a break, a pullback into this region. So this is where we want to enter our sell positions from and have a reasonable risk. Define our risk with our stop loss just above this one. Okay, so and you have another break. This is a support. This is a very clear support. Okay, this is a lower low. Now once the market retraces back up, we're expecting a continuation, so we want to wait for it. So once it break here, this is the retest of this zone. Now let me tell you something. I said it in the previous video. The market does not present a perfect picture. Never. It never does. So don't expect that this market will come and stop right inside of this zone. This is what I mean. I'm trying to take this thing out so that I can see clearly. Okay, don't expect that the market will come and stay inside of your box. No, it might give you a fake out, to trap some early sellers, take them out, or manipulation, whatever they say it is. I don't know. Some people say it is what is it called? Liquidity grab. Some say it's manipulation. But just know the psychology behind break and retest, that the market will not always stop inside of the zone. It might go out and fake some amateur traders, making them believe that we have reversed and is a bullish market, new bullish trends developing. Then they will go for a buy there, and you see what happened. It stops all of them out. So in this case, this is a clear example of what happened. It will manipulate like this. So for me, how I trade is I will wait for it to come back right inside under this bar. So once it comes under this bar and I see my favorite candlestick, I'm going for a sell, because I know I'm with the trend of the market. So the edge is more on my side. The odd is really in my favor. So that's all about break and retest. You want to mark. Now the most important thing is that you need to understand one, market structure. Where is the lower low? Where is the lower highs? So once you can define that area, which is what I just did. This is a lower low. The market bounces from here, we mark them out, and we'll see this impulsive. So you can catch this sell. Now, if you didn't catch this sell, you can just wait for this pullback. After this break, you saw this pullback, then you look for entry here. Same thing here, breaks. So I intentionally did this area like this so that you know that the market will not always stop right inside of the zone. It doesn't. Sometimes it stops right there. Sometimes it even stops before there. Sometimes it goes slightly above it, for a fake out and all that. But I'm bringing this to attention so that you can improve as a trader and understand how this market really moves. Right? So this is it. And so what will be my entry? My entry is that I want to see candlesticks pattern here, probably like a bearish engulfing. If this is the case, like the market went slightly above my zone, then I'll wait for a candle that will bring it back under here. I'm a swing trader, so I'll be waiting for that to happen on my daily time frame. So once I see that the candle comes and close below here, what I'll be doing next is heading to my 4 hour and wait for or heading to maybe the 1 hour to spot that little retest that will just come back here. Even if it's the green candle, I'm taking that position for a sell. Okay, so let's go to the chart and let's spot example. Okay, so I'll just take this out. Let's have cleaner chart. So let's talk about the entry. Please go ahead and subscribe to this channel if you're not already subscribed. If you're a new viewer, please consider subscribing to the channel. I drop a lot of nuggets like this and many more coming. So good. So right here, what did you see? We have what? A clear bearish market. All right. So this is what? Pullback, a break, a pullback, and a continuation. Okay. So as a swing trader, this is my daily time frame, and clearly we're in a bearish market. Okay. So if you see here now, I want to mark this zone out as my zone. Okay. So you see this clean break, right? Clean break and a pullback, a retest, and voila. So in a normal sense, what I will do is that once I see this green candle for my entry, once I see this green candle, which means it's back into my zone after this impulsive break, we are now back into this zone. That's when I will look for my entry on the H4. So let me go to the H4, look for that place so fast. I don't want this video to be extremely long. Yeah, so okay. All right, so good, clean. You saw where I marked out, right? So as I had this green candle bringing me back into this previous level at this big candle close. Let me measure it. How many pips is it entering from here? If I'm to enter from here, I like to set 50 pips stop loss. So in this case, I'll have 50 pips stop loss here. Then of course I will be targeting like 1 to 2 or 1 to 3 as the case may be. So let's say I enter from here, my stop loss will be right here. Then I'm targeting, yeah, this is almost, because I will target this next support zone. So this is 160 something, 67 pips, which gives me around the 1 to 3 point something. Of course, it's a good trade. It's a good trade, and you can see how the market blew all the way down. And it continues like that, blow all the way down. So if I'm to continue riding this trend at this 4-hour break, I will just stick short again. So that's all about break and retest on the bearish side. Okay, so please subscribe, comment, like. I'll drop a link to my WhatsApp group, and I'll drop a link to my recommended broker. They are very reliable, Xness, fast funding, fast withdrawing, fast deposit. I mean, easy withdrawal. I've never had issue with them since I've been trading. So please guys, comment and engage me. Hit my link in the description, my WhatsApp group link, and let's talk and let's have fun. Okay, so guys, take care and do have a very, very lovely day. Okay, goodbye. Thank you.